Hi everyone, I hope you're doing fine and let's talk about depreciation as per the US tax laws. What is depreciation? As per the IRS, depreciation is an annual income tax deduction that allows to recover costs, and the definition goes on. Very well explanatory on the screen, so you can actually look at it. But my purpose is to let us think about how it is beneficial and what is the ideology of the IRS when they are putting depreciation and the benefits of it. Depreciation helps us to reduce down our profits. So if I have income, I can claim my expense deduction or reduction to my income via depreciation and thus reducing my profitability. And when the profitability reduces, the company or the SSE is required to pay lower income tax since the taxable income has reduced. So, what did IRS do that is quite unique, and why should we learn about it? And maybe it can be helpful in your professional journey. IRS introduced three approaches to avail depreciation. Mind it, these are to be followed as per the sequence that we have mentioned. So, the first is Section 179 expense, second is the bonus depreciation, and the third is MACRS, which is Modified Accelerated Cost Recovery System. As the title suggests, 1 and 2 are optional in nature, so the SSC can decide whether they want to avail or not avail as per their own convenience or their best judgment or best tax planning. But let's see what is the purpose behind and what are the benefits in each of the following. So 179 talks about that you can claim expense cost or expense deduction in your taxable income where you are purchasing qualified business use property. It can include items like business equipment, vehicles, other business expenses like furniture and fixture. To acquire a qualified business use property also includes off the shelf computer software. Now, the question is, we didn't talk about real estate. Yes, that's right. Real estate is not included here in 179. Let's come to the second one, bonus depreciation. That talks about similar. You can claim expense of depreciation in the first year itself. Mind it, we are buying an asset worth $500,000 and we can claim the whole $500,000 within the same first year. Again, on acquisition of business use property. Similarly, as we said, that applicable to both new and old on purchase of tangible personal property like business equipment, and the list goes on, similar to 179. Let's talk about MACRS or MACRS or Modified Accelerated Cost Recovery System. It's nothing different, but it says that you can avail depreciation, claim a deduction to your taxable income over the useful life of the asset. But yes, it gives some benefits that you can claim depreciation at an accelerated rate. So that means that it allows a depreciation over the stated period of recovery, but generally shorter than the useful life of the asset. Oh, all right, sounds good. And the recovery period can be identical to the life of asset or maybe less, applicable for both old and new. Thank you so much for watching this video. This was a brief introduction that I wanted to give on depreciation. If you liked it, please like, share, and subscribe. Kindly share to the people who you think will find these kind of content useful. And for more detailed video on depreciation, respectively on 179, bonus depreciation, and MACRS, kindly view my next video where I'll be talking every topic in detail and give you a better insight on how the US tax laws work. For more content like this, please follow Learning Lane with Paris.